all know what is our statement of cash flow. We prepare our statement of cash flow based on IAS 7, where we get cash flow from operating activities plus cash flow from investing activities plus cash flow from financing activities, which will give us our net cash flow. Net cash flow, add opening cash and cash equivalent. You will get your cash and cash equivalent at the end of it. What do you do in cash flow from operating activities? Your cash flow from operating activities will always start with profit before interest and tax. You will add your non-cash, non-operating expenses. That is your depreciation or loss on sale of non-current assets. You will minus your non-operating income. Your non-operating income would be nothing but your profit on sale of your non-current assets. Then you will get profit before changes in the working capital. After you get the profit before changes in working capital, you will do the changes in working capital. That means if your current liabilities will increase, you will add. If your current assets will decrease, you will minus. Okay. So if the current assets is decreasing or your current liability is increasing, you are going to add. And you will do the reverse. If your current liability is decreasing or current asset is increasing, you are going to subtract. You will get the cash generated from operations minus interest paid minus tax paid. You will get net cash flow from operating activities. Then you add the cash flow from investing activities. Cash flow from investing activities is basically purchase and sale of your non-current assets, investment income, interest income, dividend received. You will get cash flow from investing activities. Then you add the cash flow from financing activities. That means a issue of shares, loan taken, dividend paid, repayment of loan. You will get net increase or decrease in cash. Add opening cash and cash equivalent minus closing cash and cash equivalent. What you are going to get is your add opening cash and cash equivalent, you will get your closing cash and cash equivalent. So this is your basic format of your cash flow statement. Now what we are going to do is we're going to do how we get our investing activities. How do we find out things related to assets? How do we find out our non-cash, non-operating expenses? Our non-cash, non-operating expenses are only one. That is your only two, I mean. That is your depreciation and profit or loss on sale of assets. If you have any profit on sale of assets, it is your non-operating income. And if you have a loss on sale of assets, it is your non-operating expenses. Non-operating expenses you're going to add, and non-operating income you're going to subtract. So we are going to talk about interpreting the asset account. Once you know what things are where, you will come to know what is an investing activity, what is a non-cash expense, what is a non-operating expense, what is a non-operating income. So for that, you need to interpret some accounts and arrive at the missing information. The first account that we're going to interpret is the asset account. The rule for asset account is your asset account is always maintained at cost. That means you have the balance begin down. This is at cost. And you have your balance closed down. This will be at cost. If you have anything on the debit side, that means you have purchased an asset, and purchasing an asset is an investing activity. Okay. If you have anything on the credit side, that means you have sold an asset, but over here in the asset account, this is recorded at cost. And the cost of assets sold you will never take into consideration. So if you are selling an asset, it is an investing activity. It is an investing activity, but the thing that you will consider as the investing activity is only the selling price of the asset. So only the selling price of the asset is the investing activity. Second thing, when you are selling an asset, you have to find out the profit or loss on sale of asset. How do you get the profit or loss on sale of asset? You compare the selling price with the net book value. How do you get the book value? The cost of asset minus the accumulated depreciation of the asset sold. Okay, from where will I get this accumulated depreciation of assets sold? I will get this accumulated depreciation of assets sold from the provision for depreciation account on the debit side. So you will get the net book value of the assets sold. So if you will look clearly, your asset account is maintained at cost. This is the opening balance at cost. This is the closing balance at cost. When you're purchasing an asset, this is an investing activity. Your money is going out. But when you're selling an asset, yes, it is an investing activity, but this price is not the selling price, this is the cost. From the cost, you will minus the accumulated depreciation of the assets sold. Okay, you will get the net book value, and the money that you receive on sale of asset will be given in the question. So the selling price of the asset sold is the investing activity. Net book value you will have to find out from two accounts. One is the asset account, the other is the provision for depreciation account. In the provision for depreciation account, here you will have the accumulated depreciation of all the assets that are lying with you. Here you will have the depreciation of the current year. Remember, depreciation of the current year is a non-cash expense, and what is happening to it is that you are going to add it. Here you will have the depreciation of the assets sold, the accumulated depreciation of the assets sold. So this minus this cost of the assets sold minus accumulated depreciation of assets sold will give you the net book value of assets sold. Selling price of the assets sold is investing activity. Money is coming in or it is going out. Money is coming in. Okay. Net book value, when you compare it with the selling price, you can either have a profit on sale of asset. If you have a profit on sale of asset, it will be non-operating income. If you have a loss on sale of asset, it will be a non-operating expense. If you have a profit on sale of asset, non-operating income. If you have a loss on sale of asset, non-operating expense. So net book value of your asset is compared with the selling price. Please remember, selling price of the asset is investing activity. You will get profit or loss on sale of asset. Profit on sale of asset is non-operating income. Loss on sale of asset is non-operating expense. This is added and this is subtracted. So whenever you have the asset in the cash flow statement, you will always take into consideration 4 things that you have to do related to your non-current asset. Asset purchase at cost is your investing activity. Asset sold, the selling price is your investing activity. This is outflow. This is inflow. Profit or loss on sale of asset, it can be a non-operating income if it is a profit. It is a non-operating expense if it is a loss. Depreciation of the current year. It is a non-cash expense. It is added back. So whenever any non-current asset is there and the asset is sold or purchased, you have to think of four things. Asset purchase, investing activity; assets sold, selling price, investing activity; profit or loss on sale of asset, non-operating expense or income; and your depreciation of the asset is a non-cash expense. Let's talk about this sum which is given to us over here. What do you have to do? You have to identify. What do I need to identify? You need to identify cash flow that is resulting from sale of non-current assets. Let's see very clearly. I have the accumulated depreciation of the assets sold. I have the net book value of the assets sold. I have the profit or loss. I need to find out the proceeds and I need to find out the original cost of the asset. Can we find out? Can we do it? Try it. Okay, so let's do this. I know for the equipment we will do. I know that the cost minus accumulated depreciation gives me the net book value. Do I know the cost of the equipment? I do not know. I know the accumulated depreciation. The net book value is 7160. So the cost would be 7160 plus 23,490. So the cost will be 30,650. Okay. I have sold this asset at a profit of 3,500. So I have made a profit of 3,500. So the selling price of the asset will be 7160 plus 3,500. The selling price of the asset would be 10,660. Profit on sale of assets is a non-operating income. Selling price of the asset is an investing activity. So the selling price of the asset is 10,616. Cost of the asset is 30,650. Let's do for machinery. What is the net book value of the asset? Cost minus accumulated depreciation would give me the net book value. So 54,000 minus 41,800. The net book value is 12,200. 12,200 is the net book value. I will compare it with the selling price of 9,750. I will get a profit or loss on sale of asset. I have a loss on sale of asset of 2,450. Loss on sale of asset is a non-operating expense. Selling price of the asset is an investing activity. Money coming in. Let's see about motor vehicles. What is the accumulated depreciation? I will do 28,100 plus 5,650 or minus 5,650 minus 5,650. My accumulated depreciation is 22,450. This is compared with the selling price. Selling price of the asset is investing activity. I have made a profit on sale of asset 6840 minus 5650. I have made a profit on sale of asset of 1190. This is non-operating income. Loss on sale of asset is non-operating expense. Now let's do the other part. Can you find out the accumulated depreciation for me? 11,200 minus 2870. Accumulated depreciation is 8330. This is the net book value. When I compare it with the selling price, I will get the profit or loss. So 2870 is the net book value. I have sold it at a loss of 2120. So from this I will minus the loss. That means I have sold it at 750. Net book value is 2870. Selling price is 750. When the net book value is compared to the selling price, you will get the profit or loss. So 2870 minus 750, you get a loss. You can alternatively use this shortcut. Net book value plus the profit on sale will give you the selling price, or net book value minus loss on sale will give you the selling price of the asset that you have sold. Okay, so with this I have completed page 108. I have another example over here. Let's read this example. It's on page 109. I have non-current asset of 820,000 in 2020. In 2029, it was 727,900. And they are telling that during the year, you have purchased a non-current asset, and non-current asset costing 214,000, which was depreciated by 146,000, was sold at a profit of 28,200. Depreciation for the year is 85,000. The information with the most recent to the left and oldest to the right. So the most recent information is here and the old information is here. Calculate missing items like they want you to find out what is the purchase of your non-current asset. They want you to find out what are the things that will be reflected in your cash flow statement. Okay. So let's see. I know that I have sold one asset, right? The cost of the asset that I have sold is 820,000. That asset was, sorry, the cost of the asset that I have sold is 214,000. So cost of assets sold. Let me just add a page. And we will try to use the format that we know. Okay. So here I will prepare an asset account. Asset account is always maintained at cost. And the other account that I will prepare is the provision for depreciation account. Provision for depreciation account. Asset account is always maintained at cost. This is the opening balance of your asset, 727,900. 820,000 is the closing balance of your asset. If you have purchased any asset, it will come over here. And if you have sold any asset, it will come over here. So you have sold a non-current asset of 214,000. This asset had been depreciated for 146,000. So the depreciation of asset disposed comes on the debit side of provision for depreciation account. So you have disposed this asset who has depreciation of 146,000. So let's calculate the net book value of the asset that you have sold. So the asset that I have sold, its cost is 214,000 minus accumulated depreciation is 146,000. So what is the net book value of the asset that you have sold? The net book value of the asset that you have sold is 214,000 minus 146,000. So it is 68,000. So the net book value of your asset sold is 68,000. And you have sold it at a profit of 28,200. So the selling price of the asset is 68 plus 28, 200. The selling price of the asset is 96, 200. This will be your investing activity. This is your non-operating income. So we are finding out the missing information. Depreciation for the year we record over here. Depreciation for the year is 85,000. So now I want to find out the cost of the asset that I have purchased. So I will close this account. 820,000 plus 214,000. This is giving me 1034,000. 1034,000 minus 727,900. So I will get 306,100. This is the asset that I have purchased. Let's check over here. Your disposal net book value is 68,000. We have also got the net book value as 68,000. I'll get the answer so you can check it yourself. So when you make your non-current asset schedule, if you have to make your non-current asset schedule, the profit on disposal is 96,200. So if you have to make your non-current asset schedule, you will make opening balance plus purchase, okay, plus revaluation minus disposal minus depreciation, you will get your closing balance. If you make your non-current asset schedule at net book value, I will repeat, if you make your non-current asset at net book value, you will write opening balance plus purchase plus revaluation minus disposal minus depreciation, you will get your closing balance. 306,100 is the cost of the asset that you have purchased in the current year. So these are some things that you should remember related to the non-current asset. Now I want you to write how will you calculate selling price with the help of net book value if you have a profit on disposal. And how will you calculate selling price with the help of net book value if you have a loss on disposal? If I have a profit on disposal, I will do net book value plus profit This will give me the selling price. If I have a loss on disposal, I will do net book value minus loss. This will give me the selling price again. We proceed to the next question. You can try this question for yourself. Calculate the purchase of non-current asset number 1 and calculate the proceeds that is arising from the disposal number 2. Pause the video and try this question yourself.